Afternoon. How's everyone going? Can you all hear me? Can you guys hear me? Brilliant. Welcome, guys. Welcome. So, did you guys join yesterday's webinar? We only have one participant at the moment. Brilliant. This is actually part 2 of yesterday. As you can see, guys, the trades that I actually took yesterday are very nice. $1,958. So, let's have a look. I entered here. Remember, I said I'm going to buy. It was a very nice trade to be in. Let's see what it's done on the hour. What a very nice movement. And I entered 3 times because it actually retraced downwards. And let me just zoom out. Where's my take profit? So my first take profit was actually here at this line. And I actually just cancelled it now. As you can see, take profits in the zone there. So yeah, guys, this is the trade that I took yesterday. Quite good stuff. The reason why I had 3 entries, I originally had 2 entries because I had 2 different take profit points. The reason I have 3 entries is because it actually retraced. I think I entered here firstly. I entered again here. It retraced downwards, and then I entered right at the bottom there. So I had 3 trades open. But yeah, very nice stuff. It's now in the fib zone, as shown yesterday. So I'm not so sure that it's going to come out the fib zone. I mean, I'm not sure that it's going to hit my take profit too. As you can see, we've hit 3 double top, triple top. So likelihood it's going to fall down now. But we've made some really good profit, guys. And funny enough, my take profit line was literally, I had a look. This line here above these was my take profit line. I was very close to my take profit line. It should have taken, but it doesn't matter. So I'm going to close these now. We've made some good profits, so let's close these trades. Brilliant. So that trade I took yesterday, I had a count of $10,000, and now I'm sitting on 12,861, which is brilliant, guys. So I'm really happy about that. It was a really solid trade. And yeah, I guess we'll have to wait and see for another possible trade that we could enter. Are you guys all from yesterday's webinar? Are some of you from yesterday's webinar, guys? Hi, welcome, Elizabeth. I think I saw Tabile there. Welcome, Tabile. Oh, welcome. So yeah, yesterday in the part 1 of this webinar, I actually took 3 trades. I bought the AUD JPY, and I bought right here at the bottom. And as you can see, guys, I just took profits, and I was just under $3,000 profits. And that was literally a running day trade. I entered a volume size of 1 for each trade, which was quite a nice entry. And yeah, guys, I made some decent profits. So today, I asked most of you to come back and go through some of the work that I told you to go through, and let me know what questions you have for me. So we're going to do a Q&A session. What questions does anyone have for me regarding Forex and stuff? and then we can go through the Q&A session. Does anyone have any questions for me? Anything that I went through yesterday in either the 3:30 webinar or the 6 o'clock webinar? And is there anything in particular that you want me to go through that you might be confused with? Welcome everyone, welcome. I think we've got a few more people join us. Okay, so Tabila, you want me to help you with support and resistance? Awesome. Okay, brilliant. Right, so let's just delete everything on this chart. Everything's gone. Okay, let's take our MACD away. Got our stochastic. Right, so this is actually the chart I entered yesterday, and I took profit now at this point here, and basically all I did was I used support and resistance. So if you have a look, Tabile, welcome Jazzy, welcome. You see here, this is quite a nice little area where, you know, we've had a nice bit of support. The chart's broken through the support once, but it hasn't broken through again. Let's go back. So it's this bottom line here. You can see it was also resistance at this point. It was support at this point too. Let's go back and let's see if there's any other points of reference that we need to look at. Well, we can slightly see there that it came down to the support. So we can see that. But nice thing here is this zone here. You can see there's definitely a lot of support at this level. The chart's not breaking through this zone. So I actually entered right at the bottom here. And I said to myself, okay, well, there's just a lot of support at this area. I don't believe that we're going to see much any movement downwards, so I'm going to buy at this point. So I bought right here. Now, the reason why I set my take profit at this point was because, as you see here, the previous points of resistance, you can see there was a lot of resistance at this point. It did break, and also at this point, you can actually see this is a head and shoulders, guys, slightly. There's your shoulder, your head, and your other shoulder. And I used the previous points of reference to determine, okay, where am I going to set my my zone, or my zones per se, as to where my take profit is, or where my resistance zones are and my support and resistance zones. So I've used a lot of previous information to determine where I'm going to take profit today. So as you can see here, it broke through this zone, came up, this became support again, it came up to this new zone, and there was resistance, it came back down, touched the same support, broke up, and then it broke through the next level of resistance, and it came up, and now you see we have a triple top. Now what we might see is it might easily come down and break it, which is very possible, or we might see it break down completely and come through the resistance line or support line and break down through and again to this zone here. So let's call this zone 1. Zone 1 was our entry point. Zone 2, this is the zone that it broke through, and the zone that it's currently in is zone 3. Just ignore this middle line, the 75.750. That's just the value of the current price. So that'll move, that'll fluctuate. But this is zone 3. So I set my take profit in zone 3, and basically it was just using support and resistance. So I knew that this was a support line. I didn't think it was going to break through, because look how many times it tried to break through and it didn't happen. So I bought, and I set my take profit at this zone with the assumption that we were going to take profit around this area. It was going to come to a high, and then we were going to see that it might reach its peak and then break down eventually. And this was from yesterday's trade, so very nice stuff. But you can see definitely through the use of having, oh sorry guys, what happened there? Through the use of having support and resistance, you can definitely find zones which are very important. So when you break through a zone, say a support or resistance, you know that it's going to continue, and then it's going to test another zone. Oh, sorry guys. And that's basically support and resistance. I like to refer to them as zones, because then you can sort of pick up on sections and areas specifically. But it's very important to highlight that you do get a lot of zones in Forex. You just got to work out where the most important zones are, where you see the most fluctuations, where you see the most volatility. So yeah, I entered here and I actually just took profit about 10 minutes ago, and I took profit. It was literally, my profit taking point was above the 75. It was just above the 75.865 line, but I took profit around here. And as you can see, I made $2,861, which is quite nice. And Tabila, that's basically support and resistance. So you're just going on the assumption that when there's a lot of support, the market's going to go up. And when there's a lot of resistance, the market's going to come down. But if it breaks those levels or areas, then you're going to see a nice moving trend. Okay, well, Jazzy, for me, I normally would have entered on a double bottom. Yeah, I made on the demo. I made, because I entered a volume size of 1. I had the account size of $10,000 at a volume size of 1, and I entered 3 trades at volume 1, and I made just under $3,000 on one trade that I entered yesterday, which is quite nice. But Jazzy, just to go back on that point, what I normally do is I normally see like a lot of double bottoms. You see this broke through, so I wouldn't have entered there. And then I saw a double bottom, again, triple bottom, quadruple bottom. So I was like, wow, okay, it's hit the support every single time. It's not breaking through. It came up, tried to come through again, came back down, nearly tested the line there, so I entered. And it's not necessarily based on, you see 3 double bottoms, or see a double bottom or triple bottom. It's based on just everything, your analysis coming together. I mean, I took profit here, but we could easily see that this chart could move upwards now for the foreseeable future. It could definitely break through this line, and then I could be in a different zone. But I think it was just safer to take profit. I should have left it running for you guys to see. But yeah, it was decent, and it was a nice profit-taking trade to make. I saw the opportunity and I took advantage of it. So, yeah, guys, it's really nice to identify when you have a support and resistance area or zone, because you can then move in the right direction, and take trades based on that analysis. Are there any other questions? Did you see that, guys? I did post the videos on YouTube last night. So if you haven't had a look yet, please go onto YouTube and type in TD Markets Tube. And you'll see in the search bar, you'll see us come up, and have a look at the videos. I posted yesterday's webinars, the 6 o'clock and the 3:30. So please have a look there, guys, and subscribe. We need as many subscriptions as possible, please. Are there any questions? Any other questions? Okay, so you want help with the Fibonacci. Okay, brilliant. Let's do that. Let's do the Fibonacci. Okay, let's open a trade here. Okay, I just did analysis using this US dollar ZAR. Okay, now I want to zoom out on the monthly. Okay, actually, I'm just trying to find it. Okay, I want you to, guys, if you ever get the chance, go to the US dollar ZAR weekly, and I want you to see that there's a nice bit of movement here. And okay, so Tabile, Fibonacci. Okay, you have your fib buy and your fib sell. So fib buy is recent low to recent high. Fib buy. Okay, you get a fib sell. which is recent high to recent low. Brilliant. That's the fundamentals of it. Okay, that's the crux of the Fibonacci. Okay, so I'll answer your question now, Jazzy. I'm just going to explain to Tabile what he needs to do. So here we might assume, okay, there's an upward movement. Okay, let's assume, okay, the chart's moving upwards. We know the US dollar is always going to be stronger than the ZAR. Let's be honest, guys. The ZAR is a weak currency, unfortunately. So let's assume we want to buy the US dollar, okay? Because we're assuming, okay, there's going to be a nice increase on this currency pair. So you want to draw the Fibonacci. So you want to draw it from your recent low to a recent high because you're on the assumption that you want to buy, okay? So let's draw it from a prominent low to a prominent high. It has to be from a valid area. It can't be from right down at the bottom. It has to be from a valid area. So you have to draw it, and candles have to be drawn accurately. And then for me, I would then highlight the area that's the fib zone, the 50.0 and the 61.8. And as you can see, we're in the fib zone. Now this is telling me, okay, Fibonacci buy, recent low to recent high. And this is telling me, you know what, we might see a nice move it upwards. It's in the fib zone. Chances are it's going to move upwards, but we aren't too sure. We don't control the markets. It could still come down to this 100 points. We might see that it might come down to this 100 points. You see there's a bit of resistance, support previously, and then it might move up. Yeah, the fib zone is the 50.0 and the 61.8. As you can see, I drew it, and right now we are sitting in the fib zone. There was movement down, there was movement up, and now we're currently in the fib zone. So this market's very volatile, and be careful when you trade it. You know, it's a very difficult one to be in because it's very, very volatile. But that's basically how you would set a Fibonacci buy. And the same goes for a sell. You know, you can then take your recent high to your recent low. For instance, I need a currency pair where I can show you. The problem is there's a lot of volatility in all currency pairs at the moment. So just bear with me, guys. I really just need to try and find a pair. So yeah, you can then take it from your recent high to recent low. So let's say we're sitting here in the market, okay? Let's say we want to take our Fibonacci from our recent high to our recent low. Make sure it's drawn correctly, otherwise it's not going to be accurate. And you can then see where your fib zone is. You can then highlight your fib zone, and as you can see, guys, look where the fib zone is. It's extraordinary how the fib zone works. No worries, Nico. Welcome. Don't worry about being late. You see, here's the fib zone. Look how much volatility we had. Broke the fib zone, came down, touched the zero, came back up, broke into the 61.850 fib zone, broke above the fib zone, but it still stayed on the fib zone, still stayed above it, broke back into the fib zone, back underneath, and then it was so volatile, this market. Eventually, it broke through and it took its trend and it went all the way down, and you made some nice pips. So you just got to catch it at the exact time, and that's a Fibonacci sell. You could have sold up here, you could have sold here, you could have sold there, but either way, you would have made profit on your pips. And if you used your Fibonacci correctly, that's all you really needed. I mean, you could have drawn your Fibonacci, you could have drawn your stochastic, but your stochastic would have told you some other things. It would have been a nice entry point to have. So awesome stuff there, guys. Are there any other questions? Any other questions? Oh yes, sorry Jazzy, I didn't go back to your question. Okay, so your game plan when taking a trade, right? So it all depends on how you trade. What kind of trader are you? What's your game plan? So for me, my game plan is, okay, game plan, right? My game plan is, okay, one, what is my bias? Are you a buyer or seller in the current pair that you're looking at? Okay, brilliant. Two, the trend. Once you decide what kind of buyer you are, you determine, okay, what's the trend? Are you correct, or is there, what's the trend? What do you see? Okay, trend, right? 3, we'd look at candles. I know I need to look at your candle. You need to see what candle is your candle confirming a buy, or is it confirming a sell? If it's confirming against you, then maybe wait for the candle to form. 4, stochastic. 5, MACD if you use it. And finally 6, my Fibonacci, which I think is very important. And if Fibonacci, there you go. And if I get ticks on 5 out of the 6, now disregard the MACD, because I don't always use the MACD, but if I can, my game plan is, okay, what is my bias? Am I a buyer or a seller? Okay, cool, I'm a buyer. 2, trend. Okay, it's an upward trend. Brilliant. It supports my bias. 3, candle. I've got a hammer. Okay, brilliant. My candle's telling me I must buy. 4, my stochastic's telling me I'm oversold, so it's a good entry point. 5, MACD. Okay, I don't really want to look at my MACD. I don't want to confuse me, so let's use just my stochastic. 6, Fibonacci. My Fibonacci, it's in my fib zone. It's telling me, okay, it's a good entry for a buy. Bam. That's my game plan. So I break it down and I tick whatever I need to tick, so that I can then enter the market and make the trades. Tabila, you don't always have to look at stochastic. It helps because if something's overbought and oversold, it gives you a bit of indication, okay, time to buy or time to sell. But if it breaks through the fib zone, then you know it's possibly going to enter that direction. And if it doesn't, then you know, okay, maybe hold tight. It might come back down, retest some support levels or retest some resistance levels, and then continue upwards or downwards. It's quite nice. But Jazzy, this is my game plan. I've got my 6 points. I don't always use number 5, but I definitely use the rest of them, and it definitely helps move forward. Marjorie, unfortunately, I don't trade the RSI. Basically, the RSI is based on an average, so like it's an average in terms of the pricing. Just trying to look for it. See relative strength index. Let's open it. See, RSI determines when the currency is at its strength or not. As you can see, the GBP hit a really bottom here. It's coming up. It's gaining some strength, but it's not really anywhere important. You know, if it's like the stochastic. If it's above a certain line, you know, okay, that's it's telling me that the market's quite strong. Or if it's below a line, it's saying the market's quite weak. But I don't really trade with the RSI, and I apologize. But I know, Marjorie, you were part of yesterday's webinar, if I'm correct. Remember those trades that I took? Well, I actually took profit today, and we made about $3,000 on those 3 trades I made yesterday, which is quite nice. So that's something that I hope inspires you all. Okay, so we're going to go through stochastic. Stochastic can be broken down into 3 sections. So I want you to draw a line on your 80, and I want you to draw a line on your 20. Okay, and you can see, okay, there's a section at the top, section in the middle, and a section in the bottom. Now I'm going to draw 1 in the top. Let's hope it gets to the top. I'm going to draw a 2 in the middle. And I'm going to draw a 3 at the bottom. So now our stochastic's broken up into 3. Makes it more simple. We now know what we're dealing with, which is quite nice. So we've got our 3. We've got our, what's going on here? Sorry, guys. Got our 2, and we have our 1, right? 1 can equal our overbought section. Overbought. 2 can equal no trade zone. It's a zone or area where you don't normally take trades. And 3 can be oversold. Now what this means, guys, these 3 breakups in the market, okay? all it means that in section 2, if you find your stochastic is in section 2, chances are you're not really going to take a trade because you don't really know what's going on. It's not giving you indication. So this is the no trade zone. Do not trade in this zone, guys. Awesome. And we have 1 and we have 3. 1 overbought, 3 oversold. Okay. So what happens? The market comes through, right? When it's overbought, for instance, it breaks the 80 line and it comes up. Now, you would only normally enter a trade when it breaks the 80 line again twice, because your market or the price of something can stay in the oversold or overbought area for a very long time and doesn't have any, and it won't have any specific area or movement or direction, which is very bad for you. You want to make money. You want it to come through the overbought area and you want it to come down to the oversold, because you know it will consist of movements and you will make money. Now, what happens is when a price of something is too high, and people have bought that, say someone's bought a calculator for 10 Rand, the price goes up to 50 Rand, everyone's bought in. It gets to a point where the price is just too much. People aren't willing to pay 50 Rand for a calculator or 500 Rand for a calculator. So that's what refers to it as overbought. The market comes up to this overbought section, and the chances of the price going up is very unlikely, but it can happen. And you would then normally sell in the overbought section. So once it comes through the 80 line again, you would sell. Now this happens on the oversold area too. You buy a calculator, or say for instance you have a calculator for 500 Rand, right? You sell it at 500 Rand. The price weakens, for instance. Okay, you're still willing to sell it for 300 Rand. You bought it for say 100. Price weakens, still willing to sell it for 150 Rand. Price weakens. Okay, you get to about 90 Rand and you think to yourself, okay, I don't want to sell this product anymore because I'm not making any profit, I'm making a loss. And that's referred to as your oversold area, where things are most likely not going to be, it's an area where things aren't likely to be sold anymore. The value of something is gone to its maximum, or it's devalued to its maximum, and you're likely to see that from there you're going to have a buy or a buy entry for the current price. You aren't likely to sell at this area. You normally buy at the oversold area, and you normally sell at the overbought area. And the same thing happens with the oversold area. You come through the 20 line and you only enter the market once you've broken the 20 line again, because that's a very valuable principle to have. And you don't want to make mistakes in terms of entering too early and the market goes against you and you lose $1,000, for instance. Brilliant. So I hope that answers your question, Bulelani. Welcome. You were in my yesterday's webinar, Bulelani. And I don't know if you've seen yet, but with the trades we took yesterday on the Australian dollar JPY, we entered down here where number 1 is, and I took profit here at 3. I entered a risk level of 1. I entered 3 trades because we originally had 2 take profit levels. So I entered 2 trades, for example, and then when I came back, I saw that the market actually retraced it just a little bit further. I entered again at a better value, and if you see, we took profit, guys. Account history. There's the 3 trades I took. We took the balance. There's the balance. 20th. I made my first trade on the 27th, which was yesterday. And as you can see, we made $957 profit on this one, $893 and $997 on this one. So there you have it, guys. A nice example that we took yesterday where we made profit, which is brilliant. I'm really, really chuffed about that. $2,861 profit so far. So let's hope that we can continue with this, and it inspires you all to start trading. Another thing, guys, is I'm promoting TD Markets. As you can see, TDM Holdings, they are the broker of my choice, and they are brilliant, exceptional broker. I know for a fact that if you trade with TDM Markets this month, I'm not exactly sure if it runs into next month, but I think it does. If you trade with TD Markets, you will receive a bonus of 10% to 50% of your initial deposit. So if you deposit $10,000, you can get $10,000, you can get $1,000 back deposit bonus, up to 50% even. So if you deposit $10,000, you can get $5,000. Bonus. If you deposit 500 Rand, you can get a 10% bonus of $50, and maybe even 50%, which is $250. So something I want you guys to know is that there is nice options for you guys, and TDM Markets is offering a very, very nice deal for you all. And if you guys really want to get trading and you want to get up and running, then the bonus of 10% to 50% of your initial deposit is available to you. And I know that there's a lot of nice facilities and a lot of nice resources that comes with being with TDM Markets. Brilliant, guys. Are there any other questions? Any other questions, ladies and gentlemen? Harmonics indicator. What is harmonics indicator, Tabile, and how does it work? I am not sure. I've never used harmonics. I don't know if it's in the system here. It might be here. I've never used harmonics. I'm not exactly sure what kind of indicator is, but I know that personally, I don't recommend anything that's too intricate. I like to keep it basic. Use your stochastic, use your MACD, use your Fibonacci, use your trend. If it's something that's quite in depth, then I don't recommend using it. I prefer to keep trading very simple. Once you keep something simple, it makes it very, very easy to identify and understand. When you want to use other things such as indicators that make no sense or are quite difficult to use, then it might make it a little bit harder for you unnecessarily. But if you want to use the harmonics indicator, you're more than welcome to. It's completely up to you. But for me, I'm not a promoter of anything besides the basic indicators. Okay, Bulilani, how do you go about finding the exact entry point of a trade and sell point? Okay, I was just thinking this right now. So obviously I entered here, guys, and I told you I entered because there was a lot of support, and I closed the trade here because I believe there was a lot of resistance. Okay, so I was just thinking to myself, well, if I closed here and I bought, wouldn't this be a good opportunity to sell? Okay, you would think, okay, time to sell. Unfortunately not. Basically, I've identified that there could be a new trend forming, a new pattern forming. You can see it breaks and the pattern comes down, goes up, breaks, comes down. It might be possible that there is a trend forming. So I'm going to wait until we get to this line here. See if it breaks this support and see if it breaks this channel line. If it breaks this line and it comes down, then I'll enter my sell, and I'll assume that I'll take profit about here, and then I'd be willing to buy again. I'd be really willing to buy again at this point because it's a nice entry. But you've got to be careful. It might break through the support. It could come back down again. So it might come down to this point, and then you'd be at a really, really, really nice place to buy, where I bought in yesterday. So this would be a really awesome place to buy. But you've got to understand exactly how the market moves. This is Australian dollar to the Japanese yen. I know the Australian dollar, or Australia, in fact, is a supplier or distributor of gold. So they always have fairly increased value in their currency, which is quite nice. We might also see, the guys, that it might come down to this level and then shoot back up. It could then shoot back up to this line, or can continue up to the channel line, and then we might see a continuous movement upwards. Maraca, I normally risk 1% of my my account, and that's the standard rule. You only risk 1%. Don't risk anything more than 1% because you will find yourself that you're going to end up making more losses and you will lose more than you gain. So always just trade and make sure you only trade 1%. So if it's $10,000, 1% is you're willing to lose $100, for instance. So you've just got to do your calculations. There is a volume volume calculation which we've gone through. If you need us to go through it again, we will. But there is some nice calculations for you to do to determine what your volume size can be. Are you happy with Morocco? Are you happy with that, or do you want me to go through the volume calculation? I'm sure you know it. I think you do. I think I've seen you before on here. Now you do know it. Tabile, I tend to just well, recently actually, funny enough, I've recently just stuck with these 6 pairs. I trade these 6 pairs. I maybe look at a few other pairs. I trade the gold to the US dollar and the silver to the US dollar, and I trade gold on its own and silver on its own, and I also trade oil on its own. That's basically the pairs I trade. I don't trade anything more than that because I think it's just too much. I want to understand how currencies work. I know I've got the AUD CHF open, but I just did it for study purposes. And yesterday I actually opened the AUD JPY. I don't normally trade this pair, and I saw a nice opportunity to trade. But yeah, I normally trade. Oh, sorry guys. I normally trade the basic 6 pairs. But let's go through the calculation. So you've got your account size. Account size equals $10,000, for instance. Okay. You get your $10,000. Now you get your account size times 1%. That gives me $100. If I'm, let me just make sure I'm not mistaken, guys. My maths might be off. I'm pretty sure it's $100. 10,000 times 1%. $100. Awesome. I was correct. That equals $100. Now you only normally do your calculations based on your stop loss and take profit. So let's say I wanted to sell right now. So my entry point is 0.7358. Okay. And I wanted to sell. So my stop loss would then probably be up to here. Okay. That would be my stop loss. My stop loss would be highlighted with the blue. This is my stop loss level. So what you do is you calculate the pips between your entry and your stop loss. Okay. Now if I get to the crosshair and I draw a line to my entry, I can see there's 281 in the middle. You see the 281 in the middle? Now you take away that 1 at the end because that's a pipette. So if you work it clearly, that 281 becomes 28. That's 28 pips per stop loss. Okay. So you get your $100. And you get you draw in your $100 and you do your $100 divided by stop loss per pip, which is 28 as we just worked out. Okay, so it's 100 divided by 28, which equals 3.57. Okay, 3.57. Awesome. So we're getting somewhere. Now that's still quite a lot. So what from here, what you would do is then you would do 3.57 divided by 10. Divided by 10, and that equals 0.35. 0.357. So it could then equal a further 0.358. Or you could round it to 0.4. It's up to you. 0.358 or 36 or 0.4. And that's how you work out 1% of your account. Done. So you get your account size, say $10,000. Account size times 1% equals $100. $100 divided by your stop loss per pip. Now to calculate your stop loss per pip, you look at your entry point. You get your crosshair, you determine where you want your stop loss to be. So you draw a line and you just draw your crosshair. And you see here, well now it's 25, it was 28. You ignore that last number in the middle, the 257, you ignore the 7 because it's a pipette, and you only acknowledge the 25, the two numbers in front. That's 225, and that's your stop loss level. So if, for instance, you 100 divided by 28 gives you 3.57. You then get your 3.57 divided by 10, and this gives you your volume. And that's how you work out your volume, your 1% of your account, guys. So always remember that's a fundamental thing to remember. And don't trade beyond your means. Once you become a better trader, then you're more than welcome to trade more risk at higher risk levels. As you can see, guys, I know 1% is 0.4. I just entered the market yesterday at 1 just because I wanted to show you guys the profits as quickly as I could show you. If I get 0.004 as my volume in my account size is smaller than I use, it's the lowest that I'll have. Yes. Tabile, if you do get a volume size of 0.004, you have to round it to 0.01. The lowest you can volume you can trade is 0.01. So just remember that. So you can't trade anything below that, unfortunately, unless you have maybe a micro account. But I recommend using a standard account. Are there any other questions, ladies and gentlemen? I think we've gone through quite a lot of stuff, but the lesson's still going on, so please feel free to ask me questions. Feel free to ask me questions. Hope that's answered a lot of questions. I hope that's answered anyone's misunderstanding with regards to how to determine volume size. So I really hope that's helped you all. Volume size. Brilliant, guys. So try and take a screenshot of this. I'm going to do the same because it will help you. I know it, but I just prefer to take a screenshot so I can help others if need be. Brilliant. Pendula, I did see George last night. I bumped into him. He was coming in as I was leaving. I didn't manage to bring up the FibStars problem. What I recommend is just refreshing, maybe using a different Explorer. So don't use, if you're using Internet Explorer, maybe use Google Chrome. If you're on a MacBook, maybe use Safari. Maybe use your phone. I also at one stage there I had lots of problems where I couldn't log in. If you're logged in on your phone, you might not be able to log in on your Internet Explorer. So log out of your phone if you're on your phone. And if that's not the problem, then what you need to do is just keep refreshing, put in your details. Maybe you might be putting your password in wrong or your email wrong, but keep trying and you will get it. I had that same problem and you will get it. So yeah, try that and maybe you'll move forward from there. Just keep having a go. I will, when I do see George properly, I will bring it up with him. I do apologize that I didn't bring it up with him. It was very late and he was very busy. Marjorie, don't worry about pips and pipettes. All you need to know is that pips are the most important things. So if I then draw my crosshair from here to here, right, Marjorie? So please watch. You see here I've got my 7, my 8 there on the left, and then you've got a line. You got the 265, and you got a line. You got 0.72381. Okay. Now all you need to know is that the 265 number is the number you want to look out for. Right? And all you need to do, regardless of pips or pipette, is ignore that last digit. So that 265, the number 5 should be ignored. And you must always do this. Ignore the last number and just know that you need to focus on the 26. Ignore that last number. And that's the basic principle that you just need to identify with. But don't get confused with the pipettes and pips and pipettes. And just use rather, just take away that last number and you'll be 100% fine. Let me just see here. It is important to understand candle patterns to be there. You need to know what candle is going upwards, what candle is going downwards, and which candles, is telling you there might be a change of direction. There's 3 candles to learn. It's not that difficult, and it's quite nice. Once you know them, you feel a bit better. I always believe that you can never not learn enough. So you must be willing to be able to learn more about each candle, and I think the 3 candles, it's not too much to learn. It's quite nice to learn them. So I think candles do definitely indicate an direction and trend and patterns, so it's very important. Pendula, you can access FibStars on the Internet Explorer. You just type in Google and type in FibStars and you can access on Internet Explorer. You can't download it, but you can access it. And if it's giving you trouble, then just refresh, keep trying again, maybe check that your password is correct, and then you can continue from there. Jazzy Boss, basically a Head and Shoulders. It's something that forms in the market. You'll see there'll be a level. Hang on a sec. It was here that I saw Head and Shoulders. Let me show you what a Head and Shoulders is. So what a Head and Shoulders is, you can see here quite clearly. The market comes up, and it forms a line. So this line, as you can see, I'm going to call it the neckline, right? I'm going to make it very thick. This is the neckline. You can see how our right shoulder or our left shoulder forms, comes back down, okay? Again, our head forms, and the market comes back up, and our right or our left shoulder forms again. Now, when the market comes back to this point, you know there's going to be a lot of resistance and support around this level. So you need to watch the market frantically. And you know that when the market goes up or when it starts moving up, you know that you need to buy very quickly because there's going to be it's going to be a long movement upwards. And if the market breaks, you need to sell because there's going to be a long movement downwards. And as you can see, if you had sold there, you would have had a lot of nice movement downwards. I know it's on the 5-minute chart, but that's the basic principle. So head and shoulders is basically in the candles and the market. When you see, hypothetically, that a shoulder's developed, a head's developed, and a shoulder's developed. So if you had to put a person there, you would actually see, the shoulder, the head, and the shoulder. And you would know that at this current point here, the market's either going to shoot up or it's going to shoot down. So you need to get in on it and make as much money as possible. And that's basically a head and shoulders. And it's only identified by looking for specific, specific candle settings. So if you see a head and shoulders forming, you can definitely pick it up. Yeah, we can actually go through different candlesticks right now. There's 3 candlesticks, very simple stuff. Let's go to a clean chart if we can. Let's try and find my previous analysis. I always leave my analysis running. Let's have a look. Okay, let's just open a new chart. We're going to go through candles. Okay, just ignore whatever chart I choose. I'm just picking one just for candles' sake. Awesome. Okay, so you get 3 candles. You get your hammer, you get your shooting star, and you get your spinning top, right? So as you can see here, this is a hammer. Now a hammer is described as a head on top and a long wick at the bottom. And your everyday hammer, if any of you guys are handymen, you know what a hammer is. It's got the head on the top and the long body where you hold. Now a hammer normally depicts an upward movement. And as you can see, followed with the hammer, we had a long upward candle, and continuously we had a very long uptrend. Again, we have another hammer here, and a very nice indication that the market's moving upwards, which is quite cool. Awesome. That's basically a hammer. A hammer determines that the market is moving upwards. Now, this isn't always the case, guys. You might see a hammer form and then a downward movement. So just be aware that all your indicators need to correlate with each other so that you can take the trade if you see a hammer. Awesome. Now, the next candle we can describe is a shooting star or a gravestone. And that's exactly what a hammer looks like, except the complete opposite. So except for having the head at the top, you have the head at the bottom. And that's pretty much a shooting star. You have the body at the bottom and the long wick at the top, whereas a hammer, you have a head at the top and a long wick at the bottom. And all a shooting star is a downward movement. It determines that, okay, the market's probably going to continue in a downward movement. It gives us direction. It's telling us maybe there's going to be a downward movement occurring. But like I said, you might get a shooting star, and you might still see a continuous up movement. So you need to determine, okay, what's the market telling you, ECT? And then you need to have a look, and you can identify with your final candle, which is a spinning top. Now, a spinning top basically is in between a hammer and a shooting star. And all it does, it indicates that at a spinning top, market doesn't know if there's buyers or if there's sellers, right? This is what a spinning top looks like. It has wick on either side and has a body in the middle. It doesn't know if we're going to buy or doesn't know if we're going to sell. It doesn't know if there's buyers in the market. It doesn't know if there's sellers in the market. But it's giving you identification that just be careful, the market could possibly change at any point. You could see a movement upwards or a movement downwards continuing. So just be careful. You might see a change at any point. In Pendulo, if you do your analysis and you keep practicing with your demo accounts, you can identify with where you'll see movements upwards and movements downwards. Normally it correlates with a lot of support and resistance. So if you see that you're at a resistance level, chances are you want to sell at that level, and you can then determine back to another level of support. So say if I was selling here, I would then go back and think, okay, well, my next level of support would probably be there. I would then set my take profit just before there, and that's how you would determine a trend and whether you were buying or selling. So I hope that explains both the candle question, Bulelani. I hope that explains the candles question that you were struggling with. And Umpendulo, I hope that also explains how you determine a long trend. Basically using fundamentals as well as technical analysis to determine what your standpoint is on a trade and the movements you expect it to make. Awesome. Tembi, I don't recommend using a lot of indicators at once. I recommend using your Fibonacci. That's an utmost definite. And I tend to always open my stochastic. So I always have my stochastic there just to give me that little bit of reference that I'm going to buy or sell, and it's telling me if it's overbought or oversold. It's just a little bit of reference. I sometimes use my MACD, but not very regularly. I don't tend to open my MACD and my stochastic together because I find that it sometimes gives me information that doesn't justify each other. So it gives me one instance and another, and then I'm confused between whether I'm buying or selling or if I'm not trading at all. So I don't tend to use them together, but you're more than welcome. Jeff, unfortunately, you can't determine exactly how many levels there are in a rally. You can determine, say, for instance, like the AUD JPY, which I took yesterday. You can determine, okay, let's have a look. Right. Look how many times the market tested this level. Now, just because it tested this level so many times, I knew, okay, I'm buying. That's it. Here's my double bottom, another double bottom form just above the line. I'm buying. That's it. That's all I needed, the indication that, okay, there's no ways the market's going to break this line. Time to buy. And even if it comes to only this point here, I would have made profit. If it breaks this point and comes through to the next resistance line, then I'm still making profit. If it breaks through and goes to the next resistance line, then I'm still in profit, you know. And then you would just need to monitor so that you bring your stop loss up every time, so that if the market does change its direction, you still make money. So you can't ever tell how many levels of there are in a market. You just need to determine where your support and resistance levels are, and that can give you maybe an indication how far the market might move. Now remember, guys, I'm on the 5-minute chart here, so I traded the 5 minutes primarily. As you can see, we're at our overbought area, and I bought, so the chances of the market moving upwards are very unlikely, but I traded the 5 minutes, and yeah, so as you can see, it was quite a nice trade to be in, and that's pretty much it. Are there any other questions, guys? Yes, Jeff, I'm going to put the webinar up on YouTube later, so you can just download it then from YouTube. It's really up to you. Nick, obviously the higher time frames are much better to use Fibonacci. It gives you more of a direct, and it's just a much better way of using Fibonacci. You don't want to use Fibonacci on the 5 minutes, because you'll use Fibonacci in the 5 minutes and then it'll take you 10 minutes to do your analysis, and by then the market's already changed or the market's already moving. So we only promote that you trade from 1 hour upwards, and that's our recommendation. The only reason I took a trade on the 5 minutes yesterday was because I was doing a webinar and I wanted to do a live trade, and I picked a trade and I found there was a nice entry point here. That's the only reason I did the 5 minute trade that I took yesterday. If I were to say it's impossible for the trend to go further if it has touched 3 times on the support or resistance. Okay, Pendulo, you are 50% correct and you're 50% wrong, right? Now I say this because you could find that the market could test the support or resistance line 3 times, 4 times, and then you would enter, say, on the second time or the third time, and your assumption's saying, okay, there's no ways it's going to break the support line. But the problem is we don't control the markets. So unfortunately, you can never tell. There might be some fundamental news that breaks the line and then it forms a new trend, or it just could really just decide, okay, there's going to be sellers in the market. They might have broke down through the support line. Unfortunately, you're never going to be able to know exactly when or what is going to happen. But using your knowledge to your advantage can tell you, okay, if I do see that it does touch the support and resistance line more than twice, we have a double bottom, for instance, or a triple bottom, again, we have a double bottom here, then that gives you indication, right, I am entering the market, I'm willing to lose $20 on this risk, this trade that I'm doing, to make, say, $200 profit. And if you'd taken the trade, you would have been in a nice bit of profit. But you might have found yourself that you might have found that it would have broken the support line and hit your stop loss. But then that gives you another opportunity to now sell the currency pair. You know that there's no opportunity to buy. It's now sitting up below support, which becomes a resistance. If it doesn't break through that resistance, then you know that you're going to sell that pair to the next level of support, and it still gives you an opportunity to make money. Is it true that the market forms a triangle when you put the support and resistance line, the market will go up? Okay, Tabile, I know what you're saying, right? Okay, I know what you're trying to say. So if I had to draw a line, say, through there, and then from this point here, I draw a line up, say, through there. You see how it does agree with what you're saying. Now that's correct in this instance, but you'll find that it just squeezes the market. So it doesn't matter. It doesn't necessarily mean the market's going to go upwards. You could do the same thing, and it could give you an instance where the market's being squeezed and it's going to go downwards. It doesn't necessarily mean that the market will go up. It just means that the market's being squeezed, and you might see that the next movement's going to be upwards or downwards. You're not exactly sure. So just watch that. If you do see a squeeze in the market like we sort of did here, and the market broke through the squeeze and it continued upwards, then you might see a nice squeeze upwards. But it could have broken downwards. In this case, I don't believe it would have, because there was support. But if it does happen, yeah. So when you're on the resistance line, you'll normally see a squeeze that'll go downwards, and you'll see a downward movement. And if you're on the support line, you'll see a squeeze that'll go upwards. Nick, the best combination? Well, it's up to you, buddy. I can't tell you how to trade. It's basically how you feel is the best way to trade and what you find most beneficial for you. I trade with stochastic. I sometimes use MACD. I use Fibonacci. I use trends. I use candles, and I used entry point, support, and resistance. And that's basically it. That's how I like to trade, and that's what makes me understand the markets more clearly. You might be an RSI guy. You might trade with the RSI. You might trade with the MACD. You might trade with, say, a Bollinger Band. It's completely up to you, buddy. So you need to trade on the demo account, and you need to determine what kind of trader you are. I've traded with all sorts of things. I've traded many time frames. I've tried to be a scalper. I've tried to be this. I've tried to be that. And I know what works best for me. And you guys need to go through that process to identify what kind of trader you guys are. And that's the most important part, understanding who you are in the market and understanding how you trade, the psychology factors, as well as your technical analysis, ECT. So you need to identify what kind of trader you are, and you need to identify, okay, I know I'm this kind of trader. I need to work on this. You need to work on your psychology, and from day one, you'll see some good results. And if you just keep working hard, guys, you just got to put in the hours, make the trades, write down in your journals your mistakes or your successes, and eliminate those mistakes so that you can then become a successful trader with minimal mistakes and maximize your profits. Brilliant. Are there any other questions? No worries, guys. I really appreciate your questions. I love seeing what kind of questions you guys have for me, and I hope that I answer them clearly. That's most important for me, is that you guys are learning. So I really do appreciate it, and thanks for joining the webinar today. Really, really awesome to help you guys. Pendulo, I always get asked this question, and I always have the same answer. And my answer to you is there shouldn't be a time limit. You shouldn't actually ask that question firstly, because if you're willing to put a time on how valuable the skill is, then you're not really willing to learn the skill. Now guys always ask me how long do they need, how long you need. I'm telling you straight up right now, I was a student literally about a month ago, about a month, maybe even 3 weeks ago. I was a student. I just worked my ass off. I tried to nail technical analysis. I went and I showed my determination. I was at classes 4 times a week when I was only meant to be there once a week. I then developed further and further. George could see that my technical analysis was great, and now I'm teaching technical analysis, right? But it doesn't mean that I'm now a millionaire, that I'm now the successful forex trader. Yes, my technical analysis might be really good, but there's a lot of factors in trading, not just technical analysis, that you need to focus on. You need to focus on your psychology. You need to focus on how you feel about the markets. You need to focus on a lot of other things. There's a lot of factors. So although my technical analysis is great, I still have a lot to work on. So even though I've been probably in the market or in trading for the last probably 2 months, 2.5 months, I give my time. I say till the end of the year, which is another 6 months of hard work, and I'll hopefully be where I want to be. But remember, guys, it took George 3 years to master the market. I understand that he was trading during a time where we didn't have technology that we do today and other factors, but it took George 3 years. So don't be willing to don't try and sell yourself short or sell trading short and try and master it in a week. It's not possible. Or in a month, it's not possible. Give yourself time and consistency, and you need to learn and understand how the market works before you decide, okay, it might not be for you, or you know what I'm saying. But I guarantee you guys, with our system, TDM Markets and Global Forex Institute, you will be a success and you will become successful. You just got to allow yourself that time to develop. Maraka, I've opened many accounts. I've blown many accounts too. I'm not afraid to admit it. I've blown many accounts. I opened my accounts with $100 each. I had about 6 accounts. Yes, it's not good, but one thing I've been taught by George and Sandili is that you're going to blow your account. You're going to lose money for the first 5 months of trading, and that's just how it works, because that's the period where you're learning and you're trying to adapt. So I blew my accounts. I lost money, but now I am trading and I've made money, fortunately, in my accounts. But yeah, to be honest, I regret it, because what happened is I put in, say, 6 accounts. I put in $100 each. That's $600. And if I had started with a capital of $600 instead of 6 accounts with $100 each, I would have had better luck, because I would have had a little bit more capital. I could have risked a bit more. I could have had more room to make mistakes. So yeah. So guys, I'm very much with you. Even though I'm trying to teach you technicals, it's basically because technicals is my strength. I'm very much in the same level as you. I've blown accounts. I'm still learning. I've still got a hell of a long way to go, and I want to learn with you guys. I want to succeed with you guys. So stick around and keep watching the webinars, and we can learn together. And it does take time, unfortunately, and we will get there. And yeah, it's just a matter of putting in the time and learning, and that's the most important. But I'm not afraid to admit to you guys that I've blown accounts. I'm not trying to say to you that I'm a guru or anything of that matter. I'm merely just trying to tell that I understand technical analysis really well. I'm willing to help teach you guys understand it, because I can see things that I've learned, that I've taught myself very quickly, and maybe others struggle with. Another thing that I struggled with for a long time was my psychology, and then that was terrible. Unfortunately, it really affected the way I traded. I couldn't commit to a trade. I was scared, and I've really improved on that. So if you guys are struggling, don't worry. I've been there. I'm still there. I'm still learning, and it gives you hope that there are people out there that aren't just jumping from depositing $100 and now making hundreds of thousands. I'm pretty much exactly where I began, and I've just developed better skills, and I'm moving forward with that. Let me just have a look here. Please provide us a link for the evening session for people who are already trading, as I recently found this link as well. No time is the evening session. Okay, tonight's evening session is going to be at 6 or 6:30, and it's going to be the same link, guys. I think you're going to be in the same room, chat room that we're in now. So tonight's link is 6 or 6:30. I can't remember. I'm not taking that webinar. It's Impo's taking that webinar. So please be there. He's a great teacher. Impo is a fundamental trader. He trades news only, but he'll teach you technicals and he'll teach you fundamental bases that you need to adapt with and understand. And it's awesome, guys. He's got a great view on the market, a very different view to myself. So at least learn in two different aspects today, and it'll be awesome for you. So just be aware that the webinar for Impo is going to be at 6/6:30. Bulelani, trading psychology is basically mental capacity. All it focuses on is when your technical analysis tells you to take a trade. The problem is sometimes people have a mental block. They don't take the trade. They're afraid they're going to lose money. They don't trust themselves, and they don't take a trade. And you know what happens in the end? The trade would have been successful. They would have made money. But because of that fear, they weren't able to take the trade. Now, trading psychology can be broken down into a few things. You can be greedy. You can have fear. There's a lot of things, and it's based around the human mind. And I've read and watched a lot of videos that describe, psychology and how it works. And you guys must be willing to change. You must be willing to adapt to the market and be willing to be wrong. That is the most important thing. If you're a person that's willing to be wrong, you will be successful, because there's going to be trades that you make that aren't going to be right. And you must be willing to understand, okay, I'm going to be wrong in this trade, or I was wrong in this trade, or I'm going to take this trade and I trust myself. And you've got to make the trade and leave the market and not look at your trades for the next day or for the next couple of hours or for the next half an hour and move forward from there. Yeah. And basically, Nick, money management, you just got to keep your risk low. So initially risk 1%. Once you start developing your strategy and moving forward, you can risk 2%, 3%, 4%. Manage your stop losses. So once your trade's in profit, bring your stop losses up so that you're now at break even, so that if it does hit your stop loss, you break even. And just really manage your account. Make sure that your risk to reward ratio is 3-to-1, and start working on little things. Elizabeth, yes, I actually have heard of that book. I've heard it's really good. So just try and promote it to everyone if you can. It's really good, and there is a lot of trading psychology videos on YouTube, guys. So also try and get your hands on that and try and watch some of that. But it's awesome stuff to be a part of and to listen to. It really helps promote stuff. And promotes the right trading psychology and the right mindset to have. But awesome, guys. I think we are done with this lesson. I really hope you guys learned something. I actually haven't ever really gone into the breakdown of trading psychology or any of the previous stuff that we spoke about in the last 10 minutes. But I really enjoy talking about that stuff. Not only is trading about technical analysis, it's really important to focus on trading psychology, money management, risk management. There's a lot of breakdown. There's a lot of stuff that can be broken down just from trading. There's 4 pillars, for instance. And in those 4 pillars, you distill different aspects of how you are and who you are as a trader, like greed, or if you're not willing to be right, or if you're not willing to be wrong. You've got to understand who you are, guys. Once you understand who you are as a trader, and you know your strategy, and you know what kind of trader you are, you can then move forward, and I promise you will see success. Just keep working and keep focusing on how to be a better trader each and every day. So that's my tip from me. And remember, guys, I'm on the same level as you, hey? Don't look up to me like I'm a guru. I'm still a student, just like you. I'm on the same level as you guys. So, I give a lot of insight from, my point of view, which I'm sure is at the same point of view as most of you guys. So, yeah, I really hope that you guys have learned something, and I really can't wait to see you guys in the next webinar. The next webinar will be Monday next week from 3:30 p.m. I'm not sure exactly if I'll be taking the webinar next week as I'm away, but I will make a plan to make sure that I can do the webinar at that time next week, and I'm pretty sure I'll do it. So don't worry about that. And if you guys are all on groups on WhatsApp, I'll send out a message on WhatsApp to let you guys all know that the webinar is going to be at 3:30 or 3 p.m. So you need to just make sure that you're part of a group on WhatsApp. Are you all part of a group on WhatsApp? Tembi, okay. Tembi, did I not add you yesterday? Or was that Tabile? I'm not sure. Let me just add you quickly. Oh 76 274 7006. Brilliant. And Tokozani, I'll add you now. Oh 767 1712 07 1767 1712007. Brilliant. Okay, I've got your numbers. I'll add you to the groups. Is there anyone else that I need to add to the group? Okay, Maraka. FFB, hang on a second. 070 444 6179. Perfect. Nkululeko, didn't I add you yesterday to the group? Maybe not. Okay, 073 647 5609. Perfect. And Tabile. Okay, no, Tabile, it's the same group. I'll add them to the same group. Okay, don't stress, Nkululeko. I apologize. Tabile, I've already added you, haven't I? I'm sure I've got your number. I've added you to the group. Oh no, I haven't added you, Tabile. Have I? No, I haven't. Let me just check here. No worries. Awesome, guys. So I'm going to add you to the group right now. You'll see it on WhatsApp. Please feel free to contribute in the group. Put up signals for everyone. Bring up some ideas, some trading ideas for people. You know, talk about different things. Talk about the webinar. You know, it's always good to have other people talk about things and maybe give you a different perspective. So please talk a lot of stuff. Talk about a lot of stuff on the group. Keep it active. You know, we like to see a lot of people in conversation about forex, and it keeps it, you know, keeps it going. Brilliant. You know, I really hope you guys have learned something, and I hope I've helped you in some way. If you ever want to look for me, I'm the tour guy at the GFI offices. Again, guys, you can then look at the videos. It'll be up online, TD Markets Tube on YouTube. And yeah, just come look for me and I'll be able to help you, and we can then move forward from there. So thank you so much, guys. Really appreciate your time, and I'll see you guys soon. Enjoy the rest of your week and your weekend, as I'm not sure if I'm doing any more webinars this week, but I will let you know. Thank you so much, guys.